Like it should be in a visa.
I've got to rock the VC look.
No, the VC, no, that's what I thought you were doing.
So you missed the last bit out, which is that I'm also with ImpactX Capital.
Okay.
So I'm one of the founding members, principal and CTO for ImpactX. And so what does ImpactX do? You know, you mentioned a hook earlier, blessing. Well, we bet on black people, right? So fundamentally, ImpactX Capital is a venture capital fund that invests in founding teams, startups, where at least one person is from an underrepresented or diverse background. When we say underrepresented or diverse, we mean by virtue of gender or race. The reason for this, you know, we've all seen the bad experience everyone's had, but fundamentally, we commissioned some research through Extend Ventures, and it's shown that from a venture capital perspective, so all the big money that gets pumped into startups globally, 96% of it has gone to all white male founding teams. 96%, right? Do you know how much goes to teams with a black founder, black male founder? 0.23.
Could you use the mic? We need you to use the mic.
Sure. 0.23% goes to a team with a male founder, a male black founder. Female black founders, we got a pretty good guess over there, 0.02%, right? So to put it into context, because those numbers always sound so crazy, it's really hard to really picture. But if we had 1,000 founders in the room, 2 of them would be black. From that perspective, when we look at them receiving funding. So we believe ability is equally distributed, but opportunity isn't. We also believe that we're not actually in the minority. If you take women and non-white people, that's 57% of the country. And we only receive less than 4% of venture capital dollars, right? That's the scale of the problem that we're trying to solve. So we started a fund about 3 years ago, bootstrapped it, got it up and running. We've invested in 10 companies. One of those companies is now the second black-run unicorn to have ever come out of this country. So for those of you who don't know what that means they raised money at $1 billion valuation. And that was Marshmallow, run by Alexander and Oliver Kent Graham. We've got another company in there that's just on course to raise another 40 million. We've got a company that's likely to be acquired very soon for some 20 times what they were valued at when we first went into them. We've got another company being acquired. We've invested in companies like Afrocentrics, a black hair company, Butonomy, a wide array of businesses. Something like 80% of our portfolio has a black founder in it. The other 2 have white female and Bangladeshi male, I believe. So, you know, we genuinely are inclusive. We look at the whole range. But to put that into context, those 10 companies we've invested in have collectively raised somewhere between £120 million between them, right? So that's the level of impact we're trying to have behind what we do. That's what we started with those first 10 investments, and now where we're focused on is our next big round. So we're raising £100 million to invest over the next 10 years. We're very close to getting our first big close of about 40 million, at which point we'll be investing in 10 companies a year, up to about $1 million, $1.5 million per company. And actually, if you look at this sector, there's a lot of change happening. We've got us on the horizon. We've got funds like Black Seed, which is black run. They've just closed on 5 to 10 million. You've got Cornerstone, which is also black run. They've closed on 20 million. You've got 10 by 10 VC, run by Andy Davis. They're in the middle of doing something. And then you've got us closing on 40. By the end of this year, there will be venture capital funds out there with collectively something like 80 million pounds under management, ready to invest in diverse and underrepresented founders. So that's the space that we operate in. So a little bit about myself. I know you touched on it, but yeah, you know, one of the things I like to do is give some context, because you hear some of this stuff and you're like, well, can I do that? Is that really for me? You know, I hear you speaking, you're a very well-spoken accent, you know, did you go to private school? Did you do this, that, and the other? I bet you did, didn't you? You went to Eton. And I can tell you, no, I didn't, right? I grew up in southeast London, Lewisham. My mum's Nigerian, Igbo. My dad's white, English, right? Both teachers. So no privileged upbringing. In fact, I was born here, flown back to Nigeria at 1, and then we came back a year later.
I mean, shipped home.
Shipped home. The reason I was born here, because Margaret Thatcher at the time was talking about interracial families not getting British visas. Right, so that's why we came over, to make sure I was born here. And then when we came back, my parents were both trained teachers. My dad couldn't get a job. My mum her teaching qualifications weren't even recognised. She had to retrain as a teacher. Whilst I was growing up, my mum worked as a cleaner, right? My dad worked in sales. If you ever met my dad, you'll know he's the worst salesperson on the planet, right? He's the kind of person, go out to sell his car and end up buying a truck, right? So that's really it. So not a great start. But, my parents always pushed me forward. Went to school, did my A-levels, failed them, had to resit them, managed to talk my way into college, started a degree. Actually, by that point, I'd really kind of picked up my shoes a little bit and figured it out, and got my first job in an investment bank in technology. So I did a computer science degree and spent the next 10 years in investment banking tech, working in risk and finance, working in equity derivatives and credit derivatives. First at Lehman Brothers. Yep, the bank that went down. I was there for 5 years. In the team, credit derivatives, risk and pricing. So we actually priced the first CDO squared. Oh, I was up there when that all happened. So I know that space, and spent 5 years in Switzerland working for Credit Suisse in equity derivatives, risk and pricing technology. And then I moved back to the UK and co-founded a fintech called Neighbour, where I was the founding CTO. And that was a company that raised over 200 million. And we started that from scratch. And we were lending to UK-based employees off the back of their salaries, basically. And most notably, of that 200, 100 million came from Goldman Sachs, right? So that's what I did for 5 years. And then afterwards, I left that and launched Code Untapped, which is a digital skills accelerator. We run hackathons, this, that, and the other. And then I was basically headhunted to join Impact X Capital. And now I'm part of a fund that's raising 100 million, that's invested in 10 great companies. I'm also an advisor to Crisis, the homeless charity, and their venture studio, which is investing in prop tech startups. I'm an advisor to Spring, which is the water sector's centre of excellence. They're connected to the Ofwat Water Innovation Fund, which is a £200 million fund. So as you can see, from very humble beginnings, I've achieved quite a lot. And then, as you mentioned, I was named MBE in the 2022 honours list for services to diversity and young people. But we're not here to talk about me, right? We're here to talk about access to venture capital and why should you care? Well, the reality is the majority of the big Uber-sized businesses, they've all been backed by venture capital, right? Because Demi touched on some really interesting points, and he'll talk about different types of finance, right? There are certain types of businesses that just can't operate in a repayment style finance model. You take out debt, you repay month by month, and then you develop working capital off the back of that. That just doesn't work for some businesses. Some businesses need to get a chunk of cash up front so that they can build the product, build the team, build access to market, and grow very, very rapidly. And that's where venture capital steps in. Right? But venture capital, you hear about it a lot, it's really a niche form of financing. Very small percentage of companies actually ever get it. To put it into context, I know some people later will be talking about, but can we get it? Can we get it? I've got over 1,500 companies in my pipeline, 80% of them black founders. We've invested in 10. We're going to invest in 50 when we've got the 400 million. That shows you how small the percentage of companies that will ever get access to venture capital really is. But those that do have the opportunity to become the next Uber, the next Airbnb, the next Marshmallow, which is one of our portfolio companies that hit $1 billion valuation. All right, so how do you get access to it? Well, honestly, the number one thing you can do is network, right? Get to know people like me, get to know people like Andy Davis, get to know people like Rodney Appiah. But you've also got to network outside of this room as well. And honestly, that's probably the number one thing you need to be able to do. The number one problem we have with getting access to finance, and I'm going to really break it down and keep it real, is that when we walk into a room and a white investor sees us, right, they'll listen, they'll ask you interesting questions. See, I really like your idea. I really like you. You're great. but I'm not sure other people will. I'm not sure you're going to be able to raise from other people. So I'm going to have to pass on this. And it's the network problem, right? This is the number one issue. We can talk about skills. We can talk about traction. We can talk about building out products. You touched on execution earlier. All these things are actually increasingly important, right? And for us, absolutely, I recommend before you speak to venture capital investors, you've got a product working, right? And this is the other problem. Too many of us, we see what happens in the press, in the news, and you hear about this 17-year-old kid that raised 10 billion off of a PowerPoint, right? What they miss out of that is that his dad, his mum are on the board of Goldman Sachs, right? That's the bit that they don't talk about, right? I know guys who have raised like crazy, and if you look at who's around them, you suddenly see, KPMG, Goldman Sachs, EY, and actually it's his granddad who's friends with such and such, right? If you don't have that, forget it. That idea is not going to work, right? You need to build a product and get some traction and develop. There is a pathway. Angel finance, friends and family, from small things, right? Big things can grow, right? That's really, really important. So please stop wasting your time speaking to venture capital when you're not ready for it, right? But I will stress this. Network, 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 network. I'm going to say it again, network, right? Not just us, but find allies outside of the room, right? Sometimes even enemies can be useful, right? A number of times I name drop a conversation I had with someone who I don't even like, and that opens doors. Oh, you spoke to such and such? Yeah, I did. Hated it, but it was useful, right? And that's the key thing, right? When people get that sense that you know this person, you know that person, oh, that person knows you, and actually increasingly conversations start being had about you by these people. And it's not just about, I get so many startups who say, I'm building up my influencer following. I'm like, well, good luck with that, right? That's not going to get you funded, right? It really isn't. And it's actually very, very difficult to build a strong influencer following on Instagram and the rest, unless that's what you do, right? It's not about that. When we look at investments, we don't really give a damn how many Instagram followers you have, right? We want to get a strong sense of who you are, who's your team, what is your product, do you understand that marketplace, and who else do you know? Even within our sector, we have to look at, can you raise after this? And this is actually the biggest question we always have to ask, because most of these models are not profit-making day one. So you'll raise money from us, you'll hire a bunch of people, you'll build your product, but then what next? You're still going to need more money. And you're going to need more then than you do now, because now you have a team of 20, 30 people, right? You've got costs, you've got this, you've got that. So who are you going to raise from tomorrow? And this is the big question that too many people in our community can't answer, right? So when I say, don't waste your time talking to venture capitalists, don't waste your time trying to raise money from them, but get to know who they are, speak to them, get them as advisors for your companies. One thing, white people don't like giving money to black people, but they love giving advice. They love it. Oh, I know this great black guy over here. You like black people, right? Yeah, he's fantastic. You should meet. You're black, he's black. It's great. It happens all the time. It really does, right? So, but you'd be surprised. There are a lot of well-connected, wealthy black people out there, but who aren't as plugged into the community as they should be, right? So by making friends with these people, I've got friends in private equity, I've got friends who've got baronesses, I've got friends all over the place, right? And that's not because I was born into that environment. It's because of where I've worked and how I've networked and how I've got to meet people. And then through that, your name develops over time. My Instagram, I'll get to you in a second, my friend. My Instagram following is awful. My Twitter following is non-existent. All right? I am the worst person at social media, yet most people in this space know me, right? And know what I do and know why I do it. So it's really, really important to build that type of following. So I'm going to stop there because I'm already seeing questions coming up. And this has, by the way, been completely off the cuff, right? So not planned at all. So my friend, what was your question?
So I work with a lot of businesses.
You're going to have to stand up and speak up, my man.
Okay, so I work with a lot of businesses, And one of the big issues that I found is the lack of business acumen, as you're talking about right now. So do you run programs to educate? Because I'm, no disrespect to you, I'm tired of people coming on platforms like you, telling them what we should do, but there's nothing in place to actually alleviate the issues which you're clearly identifying right now. So do you run programs which is going to educate, inspire, empower the people to be able to know how to be in front of a VC, instead of saying, hey, this is what you're supposed to be doing?
So that's a route.
For a round of applause, but you guys.
We're too scared to.
That's all right. No, that's all right. It's knives at dawn, right? That's good. That's good. No. Look, the reality is we are a venture capital fund. We've got a team of 5. I speak to 4 or 5 founders a week, right? On an average week, as well as other investors and the rest. And the rest of the team are always doing that. I've got 1,500 companies in our pipeline, which we speak to on a regular basis. It's not possible for us to run that level of training for so many people. We just can't do it. However, what we do, and what I manage to do in every one of my conversations, and I think there's a few people in the room who have spoken to me, Demi is actually a mentee of mine, right? I always spend time talking to them, right? Even if we can't invest, it might be a short conversation, might be half an hour, but that tends to be just a little bit of a way to give something back, help you, point you in the right direction. And then we work very closely with other organizations like Foundervine, like Colour in Tech. Like I'm a mentor for MSD UK. I'm a mentor for Foundervine. I'm a mentor for Colour in Tech, right? So we don't give those programs ourselves, but we work with a lot of organizations and we like to signpost to them wherever we can. Okay?
Ezechi, thank you very much. We have a gentleman in the front.
Just a recommend there. I support small business. I'm based in Manchester here, and I'm very inspired by your program, what you have achieved so far. As a small business advisor, what important, you mentioned about making connection, what to us important is the infrastructure development, to make sure those business, micro business and business who aspire to achieve the funding, that there's an infrastructure. I know you're touching about training. We think we need a bit more structure there because so many people with ideas come forward and fail because they're not ready yet or they're not in that training understanding program. So how do you think, based on what I said earlier, do you think you can expand it outside your own, because you can only do so much. How can you expand it outside your range?
So if I think I understand the question, how can you as an individual or as a young business owner, when I say young, I don't mean young by age, I mean an early business, right? Yeah. New startup owner, expand that network, get to meet other businesses. It's a really good question. And fundamentally, events like this are great, but you need to join. There are incubators, there are accelerators, there are regional ones. There's Foundervine, there's Barclays Eagle Labs, there's NatWest has their own accelerators, HSBC has them as well, right? There are many, many, many regional accelerators out there that will help you either meet other founders or meet other clients. And that's actually the biggest problem. People always focus on the fundraising first. I focus on the product and traction, 100%. Right? Build your product, get some sales. Because here's the thing, you don't raise money on a pitch deck. You don't even raise money on a product. You raise money on customer pipeline, right? Who are you speaking to? Which sales have you got set up? Which sales have you got lined up for the future that maybe you can't meet right now, right? That's the most important thing. So even when I'm advising accelerators and incubators and they're saying, how can we help early stage founders? I'm like, well, find them clients, right? Forget the funding, find them clients. Because if they can find clients, even if they can't service that need, because they don't have the infrastructure to do it, investors will pay attention. And actually, revenue-based finances, invoice-based finances will pay attention to that as well. Okay?
Fantastic, yes. A lady on her mobile phone.
Yes, thank you. You mentioned that network to network. So we all hear this term, but I wanted to ask you for some practical tips. How do you network? What do you say? Because sometimes it can be quite awkward. Even if we're here today, it can be quite awkward. And I think there's an assumption that we know how to network and build relationships.
It's a really good question.
It's a fantastic question. So there's a couple of real practical things you can do. One, if you're on LinkedIn, make sure it's up on your phone, ready to go, right? So as soon as you meet someone, they say, it'd be great to catch up. Go, right, yep, here's my LinkedIn. scan me in, send them a message, right? So that you're in their recent messages, recent history, and then follow up, right? And then let's go and meet for a coffee. What often happens in these things is that you'll spend half an hour talking, and then you disappear, and then that's the end of it. It's the follow-up that's the important bit, right? And when you're in these sessions, the difficult thing is often, well, how do I get talking to someone? Where do I start? Who should I focus on? Yes, some conferences will provide lists and details, but they're more sales-driven conferences. This kind of thing, you're going to have no idea who's out there. You see more than 2 people talking, step up. Hi, how are you doing? Or get introduced by someone and just find out who's in the room, who's interesting. Oh, this is what I do. Have your elevator pitch about yourself. This is who I am. This is what I do. This is what I'm focused on. Oh, you do this, you do that. Oh, there's a connection there. Let's grab a coffee, right? Let's grab a coffee. Let's grab a tea. Let's grab water. Let's go for a drink. Whatever that is that works for you, do that. Even if it's let's get a call. I don't actually meet that many people in person. Most of my time is spent with calls. The only time Demi meets me is at these types of conferences, right? So be ready. Have Zoom at home. Have Google Hangouts set up so that you can do those calls. And leverage LinkedIn. Make sure you connect with people and follow up with a meeting call, right? Utilize LinkedIn as well. Find the types of companies and people that you're interested in. Talk to them and say, look, send them a message. I've been following your careers. I think it's amazing. I'm doing something in this space. I would love to buy you a coffee and ask some advice, right? Don't ask them to be an advisor. Never do that. Don't ask them to be a mentor. Don't ask them to invest. Just say, I'd love to get some advice from you, right? And I'd love to buy you a coffee. Not everyone's going to respond, but you'd be amazed how many people do.
Excellent. Thank you very much for that, Ezechi. Do we have one more question before we hear from our next speaker, Demi, who did speak in the previous session, but he's going to be ready to rumble again in a moment's time. Do we have any more?
Yeah.
Okay, yeah, at the back.
Yeah, so the organisation you work with, we all know how important economics are to our mobility socially and otherwise within this community. So it'll be interesting to know, because there's not that many organisations like yours who are black-led, black-owned, kind of masters of our own destiny. So what kind of challenges have you had as a black-led VC group? And also kind of what's the visions now that you've been going a little while for the short, medium, longer term?
So we've had, I'd say, the number one problem is raising money, right, for us. No problem finding people who want to get money from us. No problem finding great companies. You hear this nonsense about, there's a pipeline problem. There aren't enough good black founders. Like, nonsense. There's loads of them. They're just not getting backed, right? Well, we can find them. That's not an issue. Raising money from other LPs, so limited partners, those people who invest in funds like ours, has been the biggest challenge, right? There's a real problem because it's funny. The more evidence you have, the more hurdles there are for you to jump over. It's almost, the more evidence I have that I can do what I can do, the more holes you're trying to pick in that. Whereas it's all, you get certain people who haven't done anything, right? Let me put this into context. We've got a team of 5. We're international. We've got people who've built businesses, sold businesses, who've run large portfolios of over 800 million. On the creative side, we've got someone who's worked with Tom Hardy, Ridley Scott. We've got a 40 under 40 from Forbes on our team. I'm an MBE, right? We've got an incredible team. We've sourced over 1,500 companies. We've invested in 10 already. We've got a unicorn, a soonicorn, and 2 potential exits. That's a 40% hit rate on our portfolio. And we still get asked, can you guys really do it? Do you have any track record? We're not sure. And then you find out that same fund invested in 2 white boys who've never done anything before. And you go, where was their track record? Right?
There you go.
And people ask, well, what do you think the problem is? And I'm sorry, it's racism. It's that simple. It is that straightforward. It is racism. It's not overt. It's worse than that. Because it's overt, at least you know to not waste your time with that person. But it's under the hood. They don't even know they're racist. That's the problem, right? You talk about unconscious bias, blah, 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 blah. It's racism. That's what it is, right? So that's the biggest challenge. But then from the community, the other challenge we do have is expectation management, right? And that's from the community. Because they see us, they go, yeah, I'm black, you're investing in black people. I've got an idea. Why can't you're not going to invest in me? Why not? I hate you, right? So, yeah, telling everyone, I hate you, I hate you, I hate you. These people suck, they won't invest in me, right? And that's been the other genuine problem. But the thing is, I understand it, right? At least I understand it. I get the disappointment. And it's painful for us, it really is. Because we know if we say no to someone, the problem with funds like ours is that other funds know we exist. And then they go, so why didn't they invest in you, right? So it almost creates a rod for our own backs. But then if we don't do it, they won't get invested in the first place. So we almost have to bear, people don't understand just quite how much pain we bear taking this role. And we do. I've had founders crying on the phone to me. I've had founders swearing at me. I've had aggressive emails saying, you're just trying to steal all my IP and you're just ripping us all off, right? Even though we're actually trying to support and invest in people. Yes, we're looking to make a financial return. Of course we are. Because if we don't, guess what? Those LPs that we're struggling to get will never invest in us again, right? And you'll never see another Impact X fund. So yes, we are looking for financial returns. The difference is, you're in the room because of the way you look when you're speaking to us. Yeah. You're not getting kicked out because of it. So,
Ezechi, thank you very much indeed. Come on, put your hands together. Ezechi Britton, MBE. Wonderful stuff.